Imagine a life of financial freedom, where passive income flows in every month. Dividend investing is a great strategy to achieve this, but it can take decades to see worthwhile results. But what if there was a way to accelerate your journey to retirement? Discover the secret to living off dividends and enjoying your youth in today's video. Welcome to Budget Boosters, where we make finance simple and easy to understand. Our goal is to provide you with easy finance tips to help you improve your financial future. Whether you're interested in personal finance, investing, or just wanted to learn more about money, make sure to subscribe to our channel and hit the like button if you found this video helpful. Let's work together to boost your budget and take control of your financial future. Dividend investing is a method of buying stocks and firms that distribute consistent dividends. This approach appeals to many investors as it offers a steady income stream that is not affected by the fluctuations of the stock market. Instead, dividends are based on the company's profitability, offering a more stable return. It's no wonder why many people find it especially appealing for retirement planning and during market downturns. Warren Buffett, one of the most successful investors, is a well-known proponent of dividend investing. His disciplined method has led to his outstanding achievements as an investor. For those looking to emulate his success, dividend investing is a great starting point. The amount of money required to live off dividends varies depending on your lifestyle and expenses. According to the U.S. Bureau of Statistics, the average American spends about $67,000 per year, which is about $5,600 per month. However, this number can differ for each individual, and it's crucial to adjust it based on your personal spending habits. By being mindful of expenses, you'll find that a moderate investment in dividend-paying stocks can provide enough income to cover basic living costs and allow for some leisure spending. As with any investment, more money invested leads to a higher return, but if your goal is to retire quickly, you may be pleasantly surprised at how fast it can be achieved with dividends. For the purpose of this video, we will use an income goal of $40,000 per year, which should be sufficient to cover most people's basic living expenses. At its core, dividend investing is a long-term strategy that demands discipline and patience. However, there are a few ways to speed up the process and get closer to achieving financial independence. One of the quickest methods to live off dividends is through the use of covered call ETFs. These types of funds allow investors to generate income from both stock appreciation and dividend payments. The ETF invests in stocks and writes call options on the same stocks for additional income. When the ETF sells call options on the stocks in its portfolio, it receives premium income that is distributed as dividends. Additionally, if the stock price rises above the call option's strike price, there may be capital gains as well, as the ETF will be forced to sell those stocks. Some of the most popular covered call ETFs include QYLD, XYLD, and RYD. These funds have attractive yields in the double figures, which is significantly higher than the yields of many traditional dividend stocks. The 12-month trailing yields on these covered call ETFs are QYLD with a 15.96% yield, XYLD with a 14.18% yield, and RYD with a 13.76% yield. The benefits of these ETFs is that they provide income from both dividends and option premiums, thus providing a more stable stream of passive income. However, these ETFs do come with some risk as the options may expire worthless or the stock's price may decline in value. So, how much do you need to invest to retire with covered call ETFs? If you aim to earn $40,000 per year from covered call ETFs, at current yield levels, you would need between $250,000 and $290,000 invested. This is relatively less, especially when compared to traditional dividend stocks, where you would need around $2 million invested to achieve the same level of income. Another strategy to live off dividends faster is by investing in high-yield real estate investment trust REITs. REITs are companies that invest in income-producing real estate such as shopping malls, office buildings, and apartment buildings. These companies tend to pay out a large percentage of their earnings as dividends to shareholders. Some of the best REITs for dividend income include Blue Rock Residential, Apollo Commercial, and Omega Healthcare. According to CBRE Investment Management, U.S. REITs delivered an average annual return of 10.8% in the last 20 years. However, the yields can fluctuate due to various factors such as occupancy rates and market conditions. To retire with REITs, if you aim to earn $40,000 per year, you would need to invest around $400,000, assuming an average yield of 10.8%. However, the actual number will vary depending on whether you diversify into multiple REITs or invest all your money into one. A realistic way to retire with REITs is by consistently investing a certain amount each week and reinvesting the dividends until you reach your desired portfolio size. With proper discipline and patience, it is definitely possible to achieve financial independence through REITs investing in as little as 5 to 7 years. When it comes to investing for dividends, having a well-defined plan is crucial. It's important to have a clear understanding of how much money you need and what your goals are. This will help you determine the best stocks for your portfolio and ensure that you stay on track over time. To create a plan, you will need to calculate your living expenses and ensure that your investments generate enough income to cover them. Remember, everyone's financial needs are different, so be realistic about how much you will need to maintain your desired lifestyle. Another advantage of covered call ETFs and REITs over traditional dividend stocks is that they typically pay out shareholders on a monthly basis, which can provide a more consistent income stream. It's important to be aware of the risks associated with each type of investment and to develop a plan that aligns with your risk tolerance. With patience and discipline, you can achieve financial freedom through dividend investing. What do you think? Would you invest in covered call ETFs or do you prefer REITs? Let us know in the comments section below. Thanks for watching. If you have any questions or wanted to learn more about finance, leave a comment. And don't forget to subscribe to the channel for more simple finance tips.